Monday, September 21st, 2020, Maneco 64, home of alternative economics and contrarian views. We're going to look at why U.S. Treasury bonds or U.S. Treasury notes are IOU nothings. Yes, they're not backed by anything. And that's not me even saying that. That was John Exter, who worked for the New York Fed for 5 years in the 50s, who helped found central banks around the world, like in the Philippines and Sri Lanka, which at the time was called Ceylon. So he was actually a sound money advocate as a central banker. He was a gold bug. So he knew what money was. And why am I talking about this? Well, because the FT has got an opinion piece by someone called Robin Wigglesworth, and he says U.S. Treasury markets brush with disaster, must never be repeated. And it says Fed tamed the chaos in March, but must take further action to buttress future solidity. So if a central bank needs to take more action to make security a safe haven, is it really a safe haven? No, Mr. Wigglesworth, it is IOU nothings. I've done a few videos about John Exter and the subject of IOU nothings. That was a presentation he did back in the 70s to the American Institute for Economic Research. I'm not going to go through it. I'm going to put a link to his presentation in the description. I'm going to put a couple of videos I've done about John Exter in the cards and in the description. One of them is entitled Become Your Own Central Banker. Don't be left holding IOU nothings. The other one is John Exter's Inverted Pyramid and the Credit Cycle. So I'll put both of those in the cards. You can listen to those videos I made in the past. But one thing I will say, the inverted pyramid, as you can see here, that's John Exter's inverted pyramid of liquidity. And at the top of the pyramid, of course, as you can see, are the riskiest assets there are out there. Derivatives, unfunded government liabilities, non-monetary commodities, private business, real estate, corporate and muni bonds, securitized debt, listed stocks. Then you get government bonds, treasury bills, then you get paper money, and then you get gold. I would say that you could add silver there as well, of course, with gold. At the bottom of the pyramid, the inverted pyramid, and that's why there will be a rush to gold and silver, because it's such a small market compared to the bubble, the everything bubble that has been created, the huge financial paper market that has been blown up by the manipulated paper market by central bankers, right? That's why they need to keep printing or creating more and more reserves to keep this pyramid from tipping over. That's what it was doing in March. And even though the price of gold and silver did drop in March, once the pyramid tips over, they're going to be the only thing left standing in the monetary sense, gold and silver. And John Exter knew that. John Exter was also the guy who advised President Nixon. He advised Paul Volcker at the time, who was Undersecretary of the Treasury for International Affairs. He advised them at Camp David on what to do about Bretton Woods on August 15th. And John Exter actually said there's a few choices. You can either raise interest rates to stop the flow of gold out from the country, or you can raise the gold price or devalue the dollar, or you could close the gold window. So he was the advisor to those guys back then, John Exter. So he knew what he was talking about. So you might ask, what about corporate bonds? Are they worth anything? No, because treasuries are the benchmark for all other bonds. So consequently, all other bonds are IOU nothings as well. We saw back in 2011, 2012, during the European debt crisis, that all the peripheral countries government bonds were worthless, right? We saw yields go from like 1-2%, and they exploded up to 10 double-digit rates, right? Like in Greece. In Italy, they went to 7. I think in Spain it went near 10, and it was only the promise by the ECB's President Mario Draghi to do anything it takes, i.e. money printing or QE, to buy those bonds. That led to the yields going back down and the prices going back up. So Mr. Wigglesworth, what does he say here? He says, the U.S. government bond market is akin to the investment world's bomb shelter, a safe space where everyone can seek refuge when the rest of the financial system is exploding. In March, the bomb shelter itself started to rumble ominously. So it's not a safe place. If the bomb shelter isn't safe, I'm sorry, it's not safe. The only safe shelter or safe haven for when this house of cards collapses, because I don't think they can keep this going forever, will be precious metals, gold and silver. Let's just keep going and see what he says here, though. Treasuries are easily the biggest and most traded fixed income securities on earth. Well, they're not really fixed income anymore because the even though they're still positive, the yields, if you account for the rising cost of living, no, they're certificates of confiscation, right? They're not giving you an income. Thanks to their safety, liquidity, and the American dollar's status as the global reserve currency, they are the world's risk-free rate, the default haven, and facilitate a vast amount of financial transactions. So what's the point eventually of facilitating transactions if these transactions become worthless? So here we have the FT again trying to talk up the paper market, the fiat currency system, the US dollar. Of course, when it comes to gold and silver, they'll do the opposite. But I just thought I would talk about this briefly today. I highly recommend you watch my other 2 videos I did about John Exter, about IOU nothings, why treasuries are IOU nothings. Well, basically it's because I'll give you like a spoiler alert. After 1971, right after August 15, 1971, treasuries were backed by nothing. Yes, some people will say they were backed by the petrodollar, but oil is a commodity, but it's not money, right? It was really backed by the geopolitical power of the United States, and I think that's dwindling quite a bit, and I think people are losing confidence in the dollar as well, seeing that the US is running $3 trillion deficits, as we've seen recently. Do foreigners who hold loads of dollar reserves, do they really want to keep holding dollar reserves? I was even reading yesterday that one of the biggest banks in the world, well, at least the biggest bank in Europe by market cap, by assets held, HSBC, they've been threatened by the situation between the US and China, because HSBC has a lot of activity in Hong Kong and China. So they could be, how can I say, blocked out of the dollar system. And HSBC is a primary dealer for the New York Fed. So I think all those factors and the fact that Treasury and the Fed are going to keep monetizing debt is not a good sign for the dollar as a reserve currency. So unfortunately, the United States has been using the US dollar in the last few years as a political or geopolitical weapon. And that's even affecting one of the biggest banks in Europe. Yes, you might say we have to punish the Chinese, but be as it may, the Chinese are one of the biggest lenders to Uncle Sam. So there you go. IOU nothings. That's what treasuries are. That's what you need to remember. Yes, yields might drop further, but they're only doing that and prices rising because the central banks are creating IOU nothings to keep buying IOU nothings. I mean, it's a farce, the whole everything bubble. And the biggest farce, of course, is this idea that US Treasuries, or any bond for that matter, is a safe haven. There's only two safe havens, and they're at the bottom of the inverted pyramid. They're gold and silver. So let's quickly look at what the markets are doing this morning here in London. It's 8:45 a.m. So we've got spot gold at 1951.20, up just over $1.50. It has been up to 1959. Silver is a little weaker. We're at 26.66, down 9 cents. The high's been $27, the low 26.46. The Dow futures are down 1%, 272 points. The S&P futures down 23, 0.75%. NASDAQ 100 future is down 0.2%, or 68 points. The FTSE is down 150, actually, down over 2.5%. It looks like they want to lock down the country again here in the UK. They're going to put the last nail in the coffin. The UK economy, that's not surprising. I expect the Bank of England to come out again. The Treasury, we heard yesterday that they're extending guaranteed loans to big businesses, small businesses, for a few more months. So more and more debt coming to the UK, more money printing, negative interest rates probably very soon. The currencies, sterling is unchanged, 129.16. The euro is unchanged as well, 118.35. The dollar is down quite a bit versus the yen. It's down almost 0.5% at 104.15. So the dollar continues to drop versus the yen. The dollar is down slightly versus the yuan, the Chinese currency, at 6.76. Crude oil is down just under 2%, WTI at 40.53. The IOU nothing 10-year yield, or the US Treasury 10-year yield, is at 0.68. It's down 1.5 basis point. So there you go. Don't get stuck with treasuries, or any bonds for that matter. They are, as I said, IOU nothings. What you really want in the end of the day in these uncertain and unprecedented times, of course, of money printing, of inflation, of economic depression, are gold and silver, not IOU nothings. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great start to the week. Take care. Bye.